Hello, everybody, and thank you for joining me today. It's Allan Barry Laboucan with the Rocks and Stocks News Show. I am happy to have one of my sponsors on the show today, which is Amex Exploration. And they had some really good news out recently, which I think is reflects on the quality of their project. We're going to talk about both of those things today. And I've got Victor Cantori on the line to talk with us. Thanks for joining me, Victor.
Well, it's always great being here. Thanks for having me on your show. It's great. This is where we can talk about all the good things.
Yeah, well, you certainly had some good things out with your 34 or $35 million financing. I mean, that's I think on its own is a good reflection of the quality of the project. But even better was that Eldorado took a big chunk of it to increase their position to 17%, I think it is.
That's
Did I get that
that's
right,
correct.
Victor?
Oh yeah, absolutely. It's about that. Yeah, yeah. Then you look at the whole financing. They're about 64% of the financing. So they took all of the back end of the charity flow. So we issued them 11 million shares there, and plus on the hard dollars, they also took a million shares also on the hard dollars. So as we it's in the press release where we announced, well, the headline was we closed 34 million and change, but there's another closing should be done by tomorrow. That's why I could talk about it. It's not material anymore. It was all in there. So we're gonna end up closing about 37,250,000 dollars. And 64% of that is Eldorado. So it's really exciting. I think Eldorado's doing the due diligence for everybody.
I'm glad you brought that up, Victor, because I was just mentioning that to somebody the other day, yesterday, I believe. I have this WhatsApp group that's becoming a pretty good place to talk about rocks and stocks. And someone was looking at Amex, and I mentioned that, I'm a big proponent of investors doing their homework. I say it every show. And I mentioned to this person that Eldorado kind of did a lot of their homework for you because they do a lot of due diligence before initially investing and now coming on for us more.
Yeah, it's really nice. I mean, I think while Dorado jumped ahead of the pack, I've said in the past, I really do believe the Champagne Zone. It very similar to I think it's very similar to their Lamac. And look at Lamac. It was supposed to have. It was supposed to be nearing their end of life now, and they've extended another 8, 9 years. By no means is the Champagne Zone closed, and it's pretty impressive that Champagne Zone, like dips at around 85, 89 degrees in that range, straight down. Like that's a mining engineer's dream when sometimes I'm talking about the Champagne Zone. It's like you've it, you know widths are probably 4 to 6 meters, like from 75 meters all the way down to 1.4 kilometers. There's no gaps in between it. There's gold right through, high grade gold
Well,
right through.
I was noticing in your early holes back when I first started, and I made some predictions, and boy,
Yes.
it's really outperformed my predictions back in 2018, I think originally. And wow, it's a phenomenal project, and I don't use that word lightly, Victor. The continuity is a big thing to me. Everybody says grade is king. But really, what's king is grade and continuity.
In continuity.
And for an orogenic gold system, the Champagne zone is kind of unique in that it has this tremendous continuity starting at 75 meters and going down over 1,000 meters.
Yeah, it's quite impressive. Exactly. It's not just the grade that we have. I mean, the grade on the resource, it's showing 837,000 ounces at 16 and a quarter grams per ton. But it's what's that's impressive on its own. But what's really impressive is the continuity. And look, we've poked a hole all the way down to 1.6 kilometers, and you're still getting the 10 grams plus. I mean, it doesn't make sense anymore to drill deeper there. It makes more sense finding other ones along. I mean, when you look at the expression on this, the footprint on it, it's a 200-meter on strike. Like we have 197 square kilometers of land to go after here. And like how many of those are hiding under there? It's quite impressive to find it. And it's funny because the surface expression is or the footprint is not that much different than the old Normatal mine, which is about 4 kilometers east of that. That there was 10 million. That's a VMS. It was straight down. It's like a
And
cigar. It's a cigar-shaped body, 2.4 kilometers down, 200 meters on strike. And here you go, you find another one. But this is nicer. This is gold. It's really gold rich.
well, and calling it gold rich is not that's an understatement. It's very rare these days to have a resource that has 16.2 grams per ton gold average grade. That's just off the charts.
Yeah, it's we've really been it's special for us this because and again when we start checking all the boxes, right? So grade, there's continuity, and then okay, but where are you located? Well, from Montreal or Toronto, you can actually drive there. And if I'd have to, if somebody would tell me, okay, if you want to put a mine in this area, where would you put it? Well, we're 4 or 5 kilometers away from a mining town. It's 4 kilometers, 4 to 5 kilometers from an electrical substation. It's the same substation that provides the electricity to Casa Berardi and to the town of Normatal. And there is excess capacity there to supply our needs. Like you look at, infrastructure and where it's located is also important. I mean, you're talking about having a town right beside you. And then if you go, so that town's got about 800 residents, but 23 kilometers, 23 minutes south of us, you have the town of Lassar, 12,000 residents. They supply a lot of the workers all over the Abitibi. And, I think that's another box that you seriously check if you want to put something into production is people ask, well, okay, well, how are you going to get the workers? This is okay. Here, you're a young family, and right now you're going and work wherever, and it's a
Wait,
fly in, fly out, or 14 days in, 14 days out. If you live and you live in Lassar, well, here's an opportunity. Then you can come and work at the Amex mine and the future mine, and you can go home for supper and be with your kids every
if
single
you
night.
live in if you live in Normatal, you could take a city bus. And you'll have to get a new route to the
Yeah,
city bus, and you could come home for lunch literally and go back to work.
yeah, yeah, exactly. You can actually go home for lunch. Exactly.
Wow.
There'll be plenty of there'll be plenty of place there to park and
And
yeah,
that's a big thing these days, Victor, because having a comfortable mind is huge because like you say, these guys got to fly all over. They're away from their family for 2 or 3 weeks at a time. Attracting them when they can sleep in their own bed and kids can go to school and they can go watch the kids play hockey. That's a big issue these days.
absolutely, absolutely. It does make a big difference.
Well, I'm a junkie for high grade gold, Victor, because it makes for such high margins and free cash flow, and that Champagne zone is phenomenal.
No, absolutely. We're gonna have a PA that's coming out. What we've been talking about, the way we've redesigned it from the previous. I even have a hard time calling it an old PA because it was done in November of 2024.
Eight
So
months
anyway,
ago.
we redesigned it, And what we're going to contemplate there is showing 4 years of toll milling.
I want to get into that in a second,
Yeah,
Victor,
yeah,
but before we do, I have a good relationship with Rob McEwen,
yeah,
and Rob and I we often talk about what we're both looking at, and I talked to him. You know, he's made one of Canada's great high grade mines, which was in Red
yes,
Lake, and it's an orogenic gold system. And he
right,
knows, you know, how these things tend to have very small lenses of high grade. Some call it a jewelry box.
yeah,
And that's what that mine was made out of. And the same thing can be said for Fosterville.
yeah.
And what makes this special and why a paper was written on this was the unique continuity of that high grade. It just goes and goes and goes. And as you can see in the pictures there, folks, it's chunky gold
Yeah.
that is easy to recover. And having such a tremendous continuity is quite spectacular.
No, no, absolutely, absolutely. That's what you're getting. You get right along from 75 meters all the way to 1.4 kilometers. This is what you're getting right through. That's why you can get this kind of grade, and that's why you can get a resource modeler to sign off on that. It's quite spectacular.
Now, you know, how you started before I interrupted you. I just
No, no,
it's
it's all
always
good.
on my mind how the continuity and the high grade is, but this also makes a special situation for how you can advance it. You have talked about in the past taking bulk samples. And a lot of times when a bulk sample is taken, it's sort of a dollars for dollars kind of endeavor. You spend a dollar, you get a dollar's worth of gold, or most of the time it's a lot less than a dollar. But due to the high grade nature of this, you know, you could potentially even make money off of the bulk sampling.
Absolutely, absolutely. That's the. The main intention is definitely a bulk sample. You can call it test mining, but definitely it's something that at this with this kind of grade is. And you're doing it for grade reconciliation. You are going to be mining it, so you definitely want to do test mining to make sure. So what we're going to be building there is a a production size decline, but for exploration, because that's the when you use that kind of wording is how you can get it through flow through. So
Yeah.
that's how you want to do it with the least dilution possible. So it'll be like 4.5 meters by 4.5 meters or 5 meters by 5 meters. Um,
So it's a
the
jump start on future mining.
Absolutely. It's gonna
Right.
not gonna be any different other than continuing development, continuing your decline, ramp development. It's basically the same thing. And that's how we're trying to get this fast tracked, is that it's just gonna be post bulk sample. It's the same thing that you're doing for your mining when you're toll milling the first few years. It's the same infrastructure that you're going to be using. So it's quite interesting the way we've put everything together.
Well, and it really excites me because I was an early one of my picks that did very well was Pretium Resources, and they had the Bruce Jack project in the
Yeah,
Golden Triangle. And I remember very well that they had drilled it, and because you're going down with a small diameter hole, you know, you don't get a totally representative grade.
that's
And
right.
when Pretium did the bulk sample of Bruce Jack, the grade, although it was quite spectacular in the drilling, it actually went up
That's correct.
significantly when they did a bulk sample because basically when you're taking a when you're trying to analyze something, the bigger the sample, the more representative it
It
is.
is.
And I think that there's that potential of a upgrade of the overall grade when you get in there and do these bulk samples.
I believe so. I believe so. I mean, it is speculation on our side,
Of
but you
course.
look at history, what it's been showing. Absolutely, that's what I'm really hoping for when it comes to grade reconciliation. That it actually should be higher. Even Osisco was the same thing when they with their windfall when they did send it out for bulk sample. They were getting some samples would end up being even 50% higher than what was representative in their MRE in their resource calculation. So. Yeah, that's what I'm really expecting. It's quite impressive. So this is the pictures you see on the back here. That's actually from one of the metallurgical holes. So you're going in with a much bigger hole. Yeah, so that's and you see what comes out of it. It's quite impressive what comes out of it. So that's where I'm saying, when you open up that face, actually when you're going down, you're here, I'll use common terminology. When you're tunneling through that, you're opening up 4.5 meters by 4.5 meters. Who knows what you're going to bump into, right? You're going down about 1.4 kilometers and then 300 meters of a ramp development, and you're going to be going through, hopefully you're going to bump into other mineralization that you haven't seen. That's amazing because you that's free, right? Because you would have spent that money. You had to spend that money anyway. So.
Well,
Um,
and your the idea that you could see a significant increase in the grade, there's science behind that as well, because you look at the difference between your inferred and when you moved it into measured and indicated, you have to use tighter lines,
that's
more
right.
density of your drilling. And when you
Yeah.
did that, the ounces went up and the grade went
And the
up.
grade went up. Yeah, it's quite interesting because some of the areas there, yeah, I'll call it the jewelry box area, when they were resource modeling in the Champagne zone, so here we have 25 meter spacing, and I'll call that. I mean, now they're calling high grade deposits 1.5 grams or or 1.2 grams. So I'm going to call this ultra high grade zone. So once there was an area there where you had ultra high grade on with 25-meter spacing. So the resource modeler goes, well, put a hole between that. So we put a hole between that, and you're getting the same or higher grade. Then he goes, well, actually, now put a hole between those two. Like, so basically, it's like 7 meters, 6.5, 7 meter spacing. And that's why we have measured when you look at our resource, that's why we have measured. There's an area there where it was ultra high grade. And he wanted to make sure it wasn't just a nugget that we had gone through, that shows the continuity of it, that you went to the point, well, I'm, at 6.5, 7 meter spacing, goes, I'm giving you, I'm definitely going to give you measured on that one, which is rare that you get measured when you're drilling from surface. You almost
Yeah,
never
and
get that.
you know why that happens for the non-geologist out there, folks, is when these modelers do their modeling, they use blocks, okay? And think of it like Lego blocks, right? And so if you got one hole, you can only use a block on either side of that hole. But when you get more density of your drilling, now you can expand the blocks geostatistically, and you get a whole lot more Lego blocks inside of that. So now, as Victor said, you can move that up to measured and indicated. And when they did that, they saw a significant increase in the grade and the ounces in the ground. And so, that's just a good reason to believe that when they get in there and bulk sample it, that you can see another increase. And you don't even need that because, like you said, Victor, these days, 3 grams, 2 grams, 3 grams in an underground operation is in fact high grade because
Yeah.
it cost you about a gram to get it out of there. And
Yeah.
so 2 or 3 grams of profit, that's very high grade. But you're looking at significantly more. I mean, even what's still left as inferred is
Yes.
around 10 grams.
Is around 10. Yes, in the Champagne zone, yes. And look,
Yeah.
property wide, when you look at property wide, you're still looking at 2.3 million ounces at 5.44 grams per ton, including
Holy
some of those
moly.
lower grade areas. So it's quite special, this whole It's quite special. What's really interesting too is like what I'd like to do is come back on once we put out our PA. So then I could really talk about numbers. I won't be able to talk about numbers now. Mind you, I haven't seen any numbers yet, anyways. But soon they're going to start showing us numbers.
Yeah.
So instead of me speculating on numbers, we're gonna talk real numbers. And
Well, in the past one you did, the IRR was very handsome, the capex was very low, and the payback was very rapid. So, now that you've got more data,
yeah.
I like where that can lead us. I'll just say that at this point.
Yeah, 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 absolutely, absolutely, absolutely. Well, once the numbers come out, we'll go over those numbers. But yes, I mean it's pretty with 4 years of toll milling, your AISC could go up a little bit during those years. But when your base is at 807 or the first 5 years under eight, how much are you going to go up?
So I I also wanted to talk about what you just started to talk about there, Victor, because there's a path. A lot of times when you've got a high grade system, you could be a long way in the future before you start pulling dollars out of that. But you've got quite a path to mining. One of those is what we've already talked about, which is uh, bulk sampling. So you would take that out of and then you would ship it to a nearby mill, and you would get the gold out of it, and you'd
That's
get to
correct.
get some statistics out of that. But the second leg of the stool, if you will, is to do a analysis of economic analysis, focusing just on the idea of taking that material initially for the first few years and toll milling that, and on a much bigger scale, of course, than the bulk sample would be.
That's right.
And because this is such a high grade, as you said, when you're looking at an operating cost of or a cost of $800 or $900, if you have to spend $100 to ship it, you're still way lower than the average cost of mining gold for the industry. But that's sort of the next stage, is to look at the toll milling idea.
Absolutely. So in the Abitibi, there's a lot of opportunities. There's a lot of optionality. Where to send it. So this is where I can call ourselves a near-term producer. Bulk sample permit's going to be in very shortly. We expect to get permitted, 3 to 6 months after that. It's going to take 1 year of construction, and again, it's going to be a production
Ramp.
size decline,
Yeah.
exactly ramp. So um, that'll take you to 2027. Now, if I come back to today, the minute our PA comes out, I'm going to start. There's going to be two feasibility studies that are going to start. One of them will be only on the toll milling because I want to show a toll milling scenario. I need a feasibility study. The reason you do it just on that is because the time that it takes to do a feasibility study on just toll milling is a lot faster. So
Okay.
once you've got a
Okay.
positive feasibility study, that should take maybe 6 months at most. And then you start your permitting process. A permitting process in Quebec will take you about 2 years, especially that, when you have no lakes or rivers to move or to deal with, you don't have fish to deal with. So what happens there is that if you look, it normally is going to be 2 years. So that would be from the beginning of 2026. You'd be permitted in 2028. Again, your ramp is there. It's
So
already
you
there, so you
could
can just
bulk
continue.
sample your way into your toll milling.
Exactly,
I
exactly.
got it.
That's the
Okay.
that's the that's the that's the plan there. So you'll be moving in again. Numbers, we're gonna get them in about 2 to 3 weeks, and we can actually talk about numbers. But permit now, that's under the normal procedure. But if you can get these governments to fast track you, which I don't see why they wouldn't fast track this project. We're not especially for toll milling. Like, so you're not dealing with a tailings management facility. You're not dealing with an open pit. You're not dealing with any lakes, rivers, or streams to deal with. So what I'd like to do is, as the bulk sample finishes, we would be able to get permitted and start exploitation immediately, right? Like just like you said, you just move right into that. So that's what we're working hard on. Otherwise, we'll know like by 2028 we'd be in production. That's what the governments want you to do anyways. They want you to use existing facilities there, and then we can use all the free cash flow that we're making. We can use that to build the facility,
So
the actual
that's
facility.
another exciting thing that your economic evaluation will first be on the toll milling concept. But if that is as profitable as it looks like everything is pointing towards, then you could use the profit from that to build your own mill
Yeah.
on Perron.
Exactly. Exactly.
Wow.
It's exactly like, if you're, yeah, I'm just gonna throw numbers out there, just speculate on numbers. If you could, in the toll milling scenario, if you can be producing 100 to 125,000 ounces a year, you know, give yourself an AISC here. I'll add 50% to the AISC at 12. And again, I'll give all
Well,
the waivers.
use the
These are
industry
just numbers.
average. 15,
Yeah.
the average for mining right now is $1,533 an
Yeah, I
ounce.
can't, I
All in.
can't, I can't, I can't see that being anywhere. And for me, in my mind, if I had 50%, I'd be at 1,200. Again, this is all speculation. 2, 3 weeks, we'll be able to go through all these numbers properly with the PA. But when you look at that, then you're selling 100,000 ounces at $3,200 an ounce. I mean, the study we're most likely going to use the same way we use it at the MRE at 2,500. But if your ASC is 1,200 and you're selling at 3,200, that's $2,000 an ounce USD. That's a lot of on 100,000 ounces. That's a lot of money. That
And something else even further down the road that a lot of people aren't aware of is that these projects in the Abitibi, that's sort of the way they start out. And some of those projects have been mining for decades.
yes, yes.
And so, you guys you got a big future there at Perron, in my opinion.
Oh, absolutely. Like if you look at the map of our property now, like what we've added also in Ontario, and you go all the way to the edge to the westernmost edge of it, you're about 50, right, with what's there now, you're talking about maybe 50 kilometers distance in a straight line. So I mean, everything that you're finding after that, you're gonna have your
Crazy.
main site. You just add to it. It's not. And again, the Champagne zone is what really makes this whole thing easy. This is where our resource was misunderstood the first time around, because it's the same business plan that would have been done with the previous MRE and with this one. The Champagne zone holds it, and that's what's going to get you into production immediately, and that's what's going to get you all the free cash flow to build up the rest of your infrastructure. How much is that worth how much is a couple $100 million a year of free cash flow worth to a stock that's got 141, 2, or 140 something million shares outstanding?
Well,
I'll leave
when
that,
you,
I'll leave that to
well,
everybody's imaginations.
and I tell people a lot of times that everybody has this story that they've got good people and they're looking after their bottom line, and but I think that actions speak louder than words. And I tell people, look at the amount of stock out and then look at how much work they've done. In
Yeah,
your case, you guys still only have 140 million shares out, but you've done close to 500,000 meters of
more
drilling.
than half a million meters. Yep,
Talk is cheap, folks. That tells you a lot about the management and the quality of the project, that they've been able to keep that share structure tight, and yet they've done a phenomenal amount of drilling, which also speaks to the quality of the project and the cost to find ounces.
absolutely. No, we're that's one thing that we're really proud of. The amount of money that we've spent on the project that we put into the ground. We're really proud of that.
Yeah, and you broached on the subject of the MRE, and the initial reaction to that I thought was kind of silly because I've tried to explain to people, not just on Amex, but on other projects, that not all resource estimates are created equal, folks.
Yeah.
Sometimes you can have a resource estimate that has what I call a lot of arm waving in it, and it will have all of it in resource or in inferred,
Yes.
and therefore it will be a long time. I've seen resource estimates collect dust for 10 years before they ever put economic numbers on it because it's a big arm waving endeavor. But when you have a plan to immediately, while the ink is drying on your resource estimate, to then do a preliminary economic assessment, you have to go with a more conservative resource estimate because you want to immediately throw economics on it. And so I knew that was the game plan. And that's why I was not worried at all because I understand the way these things are done. And then you go and you start doing more work to increase the resource. And based on all your drilling, it stands to reason that it's going to increase, which it did. And folks, when you're looking at a resource, remember they're not all created equal. And when you're doing a preliminary economic assessment right after it, it tells you that the company did one that is tight and controlled, and you can put numbers on it, economic numbers on it very rapidly. And so that's this nature of what you guys did.
Yep. Absolutely. Absolutely.
So, Victor, now that you got loaded up with cash again, there's lots of drilling, lots of catalysts. And on the drilling now, you've got the money to do it in what I call an accretive way. You can go in there and you can do it strategically and thoughtfully and in a way that can add value to the project.
Absolutely. Look, all our zones are all our zones are open, so there's really a lot there's really a lot to increase those ounces, but there's also a lot of regional exploration to do. There's a lot more zones to find. Like, one of the like on our PowerPoint that's on our site there on page 10, for example, our we had given a mandate to a structural geologist, and they think there's another Champagne zone, sorry. They think there's another Beaupré block on the Ontario side, and they show it. It's pretty interesting to go through the PowerPoint and to go look at that. And there is past showings in that area. It seems like it's the same type of rock that's in the Beaupré block. But again, the drill bit's gonna tell the tale. So we're cashed up right now, and we're just going to continue on with a good exploration program, and at the same time moving forward with the development, and building this ramp going forward, this decline going forward.
Well, you see a big smile on my face when you start talking about exploration. And,
Yes.
folks, what has always impressed me about this Beaupré block is that not only do you have the Champagne zone, but right around it, in maybe a kilometer or so of radius, you've got all these other deposits. And on a big picture geological perspective, what that tells you is there was a big, powerful system of mineralizing and bringing those fluids up into all these various different deposits. And that speaks a lot about your future to add ounces well beyond the Champagne zone and other deposits to be mined. So, I think in a big picture perspective, Victor, it's fair to say that Perron could have a decades long mining life to it.
Absolutely. I do believe it. I mean, again, the drill bit's going to tell the tale, but yeah, there's many more zones. There's many more zones to discover, and there's also the known zones. There's a lot to continue there, and grow the ounces that are already in the known zones that are already economic.
Well, and when you've got someone like Eldorado giving you a lot of money to do exploration, it speaks a lot to the quality of the project because they're not looking for something that will be in production for a couple years. They want a
That's right.
couple decades. And
Exactly.
to have that in Quebec, where you get these preferential ability to raise money like this funding you did. You said Eldorado is buy the it's being bought at like $3 and almost well double your current market value or your current price.
Yeah, it's a little bit less. They've changed the taxation here, but it's still the actual delta is it's a 42%, but we're going to be able to go get another 22.5% from the Quebec government. So in the past we used to get almost double. You do get double um, if it's in critical minerals. If not, it was always like 1.8. But at this point, we're going to be able to go out and get like 1.67 or so, which is great because it's great for the shareholders. It's and and the back end buyer, it's Eldorado. So and now they're actually above 10%. So they're a reporting issue. Like so they're going to be reporting their position now. So it's great.
So let's before we close, Quebec, one of my favorite jurisdictions in the world because they are, I think personally, I think Canada should model Quebec when it comes to their mining friendly attitude. And it's not just for mining, it's also for exploration. There really is not a better jurisdiction to, not only do you have a town right beside your project, but it's in Quebec.
Yeah. Absolutely. You have it's when it comes to jurisdiction, it's really great. It's really great. I couldn't ask for better. Right country, right province, right right beside a town, not far from a city. So it's really amazing. I'm
It
really
is.
happy.
And it's it when your optimism for permitting and stuff like that, you really it's not pie in the sky, folks. That's what happens in Quebec. So it's a great project, and I think you're going to have the next great high grade mine worldwide. And to have that in Quebec is even better.
Absolutely. I'm looking forward to getting the bulk sample out on this.
Well, I'm looking forward to our next interview, Victor. Did you have any closing comment?
No, that was it. I think we've said a lot, and I'd love to, like I said, I'd love to come on shortly to as soon as the PA numbers are out, and then we can discuss we can definitely go into detail with the numbers. So at least for all your subscribers and your listeners, we can go through it in detail for them.
Sounds good, Victor. Well, thank you very much for joining us today. I'm going to close it off now by saying, folks, do your homework,
Yep.
speak with your financial advisors,
Yep.
keep my bias in mind that
Yep.
they are a sponsor of my show. So, but they pay me to help with content. They don't pay me for my opinion
Mm.
or how I've based that on my 30 years of experience. They certainly don't pay me for my enthusiasm. And I think that that shows quite clearly because when it all comes down to it, folks, I haven't seen very many projects like this in my 32 years in the business. And I think it's a very special one. But do that homework. Go to their website. Look at all the data. Look at the fact that Eldorado has also done their homework. And now they're becoming really biased because they own a big chunk of the company. But all of this is, important for you to do your homework. And we'll do more of these real soon. I think they're going to have a great flow of news. So we'll have lots to talk about. Victor, thanks again for joining us today.
Thanks, Larry. Allan.
Yeah. All the
Sorry.
best, everybody. Have a
Sorry.
great day, and we'll talk to you soon.